You are listening to The Vocal Technologist. Spoken tech for your ears.
You know, it really feels like the pace of tech it's not linear anymore, is it? It's just exponential.
Oh, complete.
Every single week you look at the news and it's like the stakes have been raised all over again.
Exactly. It's not just small improvements. We're talking about these massive trillion-dollar bets on the future, the very nature of work. And, well, who owns the power grid that runs it all?
And trying to follow that flood of information is, it's basically impossible.
It is. So I guess our mission here is to be that filter for you. We're pulling out what we think are the most critical, strategic, and, technical developments.
A shortcut, really.
Yeah, a shortcut to understanding where the industry is placing its biggest, most world-changing bets right now.
So let's jump straight in. First up, this high-stakes financial game that really you can only call the AI arms race.
The capital is it's astronomical.
And we have to start at the top, right? With the companies that are already in, or are at least knocking on the door of, the trillion-dollar club.
And if you're talking about capital and infrastructure, you have to start with Nvidia. They just hit an absolutely astonishing $5 trillion in market value.
$5 trillion.
It's unbelievable. And what's really crazy is that this valuation is now more than all their major chip competitors combined. We're talking AMD, ARM, Intel, Qualcomm, TSMC.
All of them together.
All rolled into one. It's bigger than entire sectors of the S&P 500. So investors are clearly treating Nvidia not just as a chip company, but as, the fundamental utility for this next industrial revolution.
It's a number so big it's almost meaningless. But then you realize it's dictating our infrastructure for the next decade.
Yeah.
And of course, the company driving all that GPU demand, OpenAI, is making its own moves.
Oh, yeah.
They're laying the groundwork for a potential IPO that could value them at up to $1 trillion. And they're looking at filing as soon as, late 2026?
And that ambition comes from just massive growth. Their annual revenue run rate is on track to hit something like $20 billion by the end of this year. And to handle that kind of fundraising, and this is the crucial part, to get and keep the talent they need, they've made this really strategic governance change. They converted their for-profit arm into a public benefit corporation, a PBC.
Okay, that PBC move is really interesting. It feels like a very non-traditional path for a company aiming for $1 trillion IPO.
Mm-hmm.
What's the strategy there? Is it just about making fundraising easier?
Well, it signals a couple of things. Yes, it can definitely ease fundraising and help with regulatory hurdles. They actually just resolved a big investigation by promising to expand in California.
Right.
But on a deeper level, the PBC status is about signaling their long-term goals are about more than just pure profit. It gives the leadership more flexibility. It calms some fears about, who controls this powerful tech. And it just sets them up for a smoother IPO. It's a very calculated move.
Securing talent is one thing, but securing the actual physical hardware, that feels like the real battleground. The spending is putting huge pressure on even the biggest players. I mean, look at Meta.
Meta's spending is almost reckless. They announced $75.5 billion in infrastructure deals in just 3 months.
3 months.
And they are spending more than a third of every single dollar they earn on AI infrastructure.
Over a third. That's an insane commitment. So what happens if this doesn't pay off for them in, immediate revenue?
And that's the massive high-stakes risk. They're betting big that this will improve ad targeting and future products. But if that AI revenue doesn't grow proportionally, they are suddenly stuck with $600 billion in sunk costs.
$600 billion.
Yeah, that includes 16-year lease commitments, depreciation. It's a gamble that could absolutely lead to a disruptive failure if that ROI doesn't show up.
So even the giants are feeling the pressure. And speaking of giants showing some strain, what's going on with AWS? I mean, for years, they were the undisputed king.
They definitely still have customer loyalty, but the market is so competitive now. Our analysis shows AWS is really getting slowed down by its own internal bureaucracy right when it needs to be nimble.
So slow decision-making.
Exactly. Slow decisions on key AI features. A kind of resistance to changing how they do business. It's making their AI offerings feel a bit lackluster, less attractive to those high-growth startups that used to be their bread and butter. They're losing their edge.
And this whole infrastructure war, it's not just about money and memos, it's about physical resources. Power, specifically. How are data centers even managing the insane electrical load?
It's a huge question, and it gets into this idea of socially responsible development. We're starting to see some really clever solutions, like this Aligned Data Centers project in the Pacific Northwest. They're installing a massive battery.
A giant battery. So what does that do for you, the listener?
It lets the data center pull less power from the grid during peak hours. And crucially, it means the facility can get online much faster without overwhelming the local utility company. The research suggests the grid could handle way more data centers if they could just, dial back their consumption for a couple hours a day.
So it's a model for future growth.
It has to be. Self-funded batteries allow AI to grow without kneecapping local power.
Which brings us perfectly to our next theme, the future of movement. The robotaxi race and what it means for the workforce.
Right. If AI is the engine, autonomy is the first vehicle out of the gate. And it's an intensely competitive race.
We've got Uber and Nvidia partnering up.
Yep, a fleet of 100,000 robotaxis starting in 2027 using Nvidia's Level 4 automation hardware.
But the twist there is that Nvidia isn't just selling the chips, right?
Yeah.
They're becoming a direct competitor to their own partners.
Exactly. Nvidia is reportedly developing its own internal robotaxi project, a $3 billion investment launching in the US. And they're using a single-stage end-to-end neural network, which is the key part.
Okay, for those of us who aren't autonomy engineers, break that down. Single-stage end-to-end neural network. What does that mean in simple terms?
It basically means the system learns to drive in one consolidated step. It takes sensor data in, and it outputs vehicle controls without a bunch of complex steps in between.
And the benefit is?
It can be trained almost entirely in simulation, so it learns faster, cheaper, and safer than endless road testing. It makes their entry into the market incredibly aggressive.
And then you have Tesla, making the biggest bet of all. Elon Musk apparently overruled senior staff, some of whom quit, to prioritize the robotaxi over the cheaper Model 2.
And if you look at the big picture, you can see the logic. It's risky, but the robotaxi promises these huge profits and a massive boost to Tesla's stock price.
Which heeds.
He absolutely relies on that stock price to fund his other ventures. If he'd picked the low-margin Model 2 and the stock had tanked, his whole empire would be at risk. It was a decision driven by necessity.
Okay, so let's talk about the human side of this. As companies pour trillions into AI and autonomy, we're seeing huge workforce changes. Amazon is expected to announce the largest layoffs in its history.
Up to 30,000 corporate staff. It's a staggering number.
Is that all because of AI?
Well, generative AI is a factor, for sure. But Amazon executives are publicly framing it as a move to gain agility. They feel the company just got too big and layered during the pandemic and needs to be streamlined.
But this isn't just an Amazon problem.
Yeah.
We're seeing this white-collar squeeze everywhere. Tens of thousands of workers facing a really stagnant job market. That has to have long-term effects.
It absolutely does. Companies are keeping teams flat or even shrinking them because they believe AI can automate a ton of administrative work.
The downside being?
The downside is severe. It's frustrating for job seekers, obviously, but it also burns out existing employees who have more responsibility. And critically, it hurts the development of future leaders because you're wiping out those mid-level management roles. The professional ladder is essentially frozen.
Creating a whole generation of people who feel stuck. Let's shift from the boardroom to the code itself. Under the hood, how is AI changing the day-to-day of coding? I love this analogy of developers becoming like surgeons.
It's a really good one. The idea is that the AI agents handle all the prep work, the secondary tasks, the debugging. They're like the support team. It lets the human developer focus only on the essential, creative part of the job.
The crucial incision.
Exactly. They're not bogged down by the paperwork.
That sounds like a productivity dream. But there has to be a catch, right? A hidden cost.
There is, and it's being called comprehension debt. The more AI-generated code you add to a code base, the exponentially harder it becomes for a human engineer to review it, maintain it, and really understand it.
So you spend more time debugging the AI's code than you saved.
Potentially, yes. And it means that having clear written coding conventions becomes absolutely critical, because if your code base is a mess, the AI is just going to learn from that mess and make it worse, faster.
The AI learns from the manual you give it, so the manual better be clean. Okay, shifting from code to privacy. What's the latest on IP addresses? I thought just, truncating them was enough to make data anonymous.
That is a very persistent and potentially costly illusion for a lot of companies. A truncated IP address is still personal data under GDPR, especially when it's combined with other identifiers.
So truncation isn't enough.
Not at all. Many companies are creating huge compliance risk without even knowing it. What you actually need is specific, robust encryption designed for IP addresses, not just chopping off the end.
Good to know for anyone listening who works with user data. What about on the programming side? Any new tools making it easier to develop across, say, Apple and Google's ecosystems?
A big one is the new Swift SDK for Android. It's in preview now, but it lets developers port Swift packages to Android.
And that's significant because
Because over a quarter of the packages in the Swift package index can already be built for Android. It dramatically lowers the barrier for using Swift's ecosystem outside of Apple's walled garden.
And Android itself is changing what it means for a phone to be idle.
Yes. Android 17 is introducing something called Min Mode for the always-on display. It basically uses that low-power screen tech to display full-screen app interfaces.
So your phone can show you what, a live map or a sports score while it's technically off.
Exactly. It completely reshapes how we think about the mobile experience, making the phone feel on even when it's in that idle state.
That's a powerful set of updates. Let's end this analysis, though, on two really positive notes for human health. First, there's been incredible progress in restoring sight.
This is truly groundbreaking. It's called the Prima Eye prosthesis. It is the first device to restore functional sight lost to advanced macular degeneration.
Wow. So wearers can perceive shapes again.
Shapes, patterns. They can navigate a room, maybe even read again. Now, it's currently only black and white, but it's a massive leap forward.
And then there's the fight against Alzheimer's, which is so important to so many families.
There's some real hope there, too. An experimental drug called ALZ-801, it's a twice-daily pill, showed incredibly promising results.
How promising.
It slowed cognitive decline by 52% in a high-risk group, and their brains showed 18% less atrophy in the hippocampus compared to the placebo group. It actually prevents the amyloid proteins from clumping into plaques in the first place.
Which is a huge step. That is a fantastic note to end on. So as we wrap things up here on The Vocal Technologist, what's the big takeaway? We've covered trillion-dollar valuations, workforce chaos, and infrastructure running on borrowed battery power.
The defining feature of this moment is the paradox. On one hand, you have this unprecedented, almost reckless financial bet on AI and autonomy. On the other hand, you have massive workforce disruptions and these profound infrastructure challenges right down to the level of just electricity. The revolution is here, but it's messy and incredibly expensive.
And that infrastructure point brings us to a final thought for you to think about. While we're all focused on Silicon Valley's cloud capacity, the most important infrastructure race defining the next 30 years might not be in the cloud at all.
You have to look at global power.
Right. China is building nearly as many nuclear reactors as the rest of the world combined. Their capacity is set to surpass the U.S. by 2030, and they're making breakthroughs in next-gen tech.
And why does that matter for global influence? Because if China dominates the nuclear export market, building and maintaining those plants creates deep, decades-long geopolitical relationships with other countries.
It's an energy dependency.
It's a dependency that translates directly into global influence.
So the true infrastructure race might not be measured in GPUs, but in the power plants that generate the electricity for them. Something to consider as you think about where all those trillions of dollars will ultimately plug in. Thank you for joining us.
Until next time.
Spoken Tech for your ears.